Hello students. The students will start now, students, in this in this particular aspect of the concept of the total income, students. As far as the last lecture was concerned, the previous session, there I have already told you about one very important aspect, and which was that we had to the charging section. We were focusing, students, on the charging section, and I'm very sure now that you all are very clear about what are the wordings which are being used, like for example the previous year, the assessment year, and why they are being used at first place. And I'm telling you, students, even in the CFR level, why that they are using the term previous year, why not the term financial year, that remains a kind of a mystery for many of them. So now you all are aware the concept of previous year has been used for the simple reason that you calculate the total income. When you are going to calculate the total income, when are you going to calculate the total income? You are going to calculate the total income as on the 1st of April of the next financial year. That is the earliest time. It's not that people calculate it, but the earliest point of time when the people can calculate their total income for the previous year is the 1st of April of the next financial year. So 1st of April of the next financial year in that particular case will be the relevant date. The date in which what is the implication or what is the importance of that particular date, students? What is the importance of that particular date? So I told you the importance, students, of that particular date. That whatever is the law which is applicable on that particular date, which is 1st of April of the next financial year. So the law as applicable as on the 1st of April of the next financial year, on that particular basis, the total income will be calculated. And consequently, the tax liability would be calculated. The total income and consequently the tax liability would be calculated. So whatever is the law which exists or which is enforceable on which date? 1st April of the next financial year, that becomes the relevant provision which has to be considered for calculating the total income and eventually the tax liability. The total income for previous year. And why it is a previous year, students? Because we are calculating what is the point of time of calculation? The next financial year. In the next financial year, you are computing the total income for the previous year. I hope that all of you are clear with this one now. Every one of you. So students, over here, in the note number 3, the entire game of income tax law is tax liability. This is the real game, students. The entire game, students, over here is the computing the tax liability. The tax liability as on the relevant date. The tax liability as on the relevant date. So as on the relevant date, what is the tax liability? So therefore, it means whatever is the law which is applicable as on that particular date, on the basis of that law, the tax liability would be calculated. And as you all know, students, tax liability is the function of two factors. Tax liability is the function of two factors. What are the two factors? One is the total income, and second one, students, is the rate of tax. rate of tax. That is how you are going to get your tax liability, students. The total income and the rate of tax. If you people would have done IDT also, students, there also customs duty valuation into the rate of duty of customs. That will fetch you the customs duty, which you are to calculate on the relevant date. Same is the case with the GST. Value of supply, on that you multiply with the rate of GST. That will fetch you the GST liability. So the tax is always a function of two factors. One is the value, another is the rate. Now students, be careful over here in this case. Now you would appreciate this point that the law of GST or the law of customs duty, you will find that that law is, the volume of that law is lesser, the volume or it is less, the GST law or the customs law is less voluminous or less bulky as compared to the income tax law. You say na, syllables is very vast of income tax. Syllables is very vast of income tax as compared to GST or customs duty. Why you say so? Why do you say so? The reason is very clear, students. The reason is that in the GST or the customs law, the topic on valuation is a single topic, a small topic. The topic of valuation, students, is a single topic or a small topic, students. One topic, that is it. Whereas under the income tax law, the value here is represented by total income. The value here is represented by total income. And you also know that the journey of total income starts with the heads of income and all those stuff. Eventually there are 5 heads of income. Not only that, to come to the total income, you also have to read the chapter of set off. You also have to read the chapter on clubbing. Then you also have to read the chapter of chapter 6A. And once that has been dealt with, that you get the total income as the final amount. And that is the reason why, because of the length of the entire content, which requires the taking into account the 5 heads of income, including the chapter 6A provision, including the clubbing of income, including the set off and carry forward of provision, that the length and that is the volume. Otherwise, apart from this, rest everything remain the same. Be it GST or income tax, doesn't matter. Because the rest of the provision are all about the administrative provision. Isn't it? And that exactly is the game, students. So this is precisely what you should always bear it in mind. Nevertheless. So let's start with it, students. So our entire focus now, students, in this initial case would be on this two. A summary of these two. Total income and the rate of tax. And once that has been done with it, your entire scope of income tax or a bird's eye view of the income tax is ready. And once your bird's eye view of the income tax is ready, the next part is the topic itself. So let's try to start with the first discussion, students. The total income. I'll start with the first one. Over here, total income. Now, students, if you see over here, I told you earlier also, in this context, definition. Now, if I ask you, someone, that what is a total income? What do you mean by the term total income? If this is what has been asked to the students, then what is the answer? What do you mean by the term total income, students, in that particular case? What is the answer in that scenario? So all of you or every one of you are saying the same thing. And what is that? The total income means 5 heads of income. Then, as you just now have told us, that you also have to take into account the clubbing provision, the set off, the chapter 6A, and after doing that, we get the total income. This is how, sir, we arrive at the total income. That is what everyone is saying. Since this is only one part of the meaning of the term total income. This is only one part. And that is the reason why this definition is one of the most important definitions. Total income. And why I'm saying it is an important definition, because under section 2 clause 45 of the income tax law, the total income has been defined to mean, didn't I told you in the first class, any definition which starts with the term mean, definition which starts with the term mean is an exhaustive definition. And if it is an exhaustive definition, then what did I told you? Nothing more, nothing less. So whatever has been put up in that particular definition, that is what has to be taken by all of you without any further expansion or without any further deletion. Whatever is written, that is the only meaning, nothing further to be added or nothing further to be subtracted. Is that point clear to all of you? So, total income means what? It means, not mean, means. Means what? So, I am dividing this definition into three parts. The total income, students, means income which falls within the scope of section 5, and over here, and computed in the manner laid down under the Act. And computed in the manner laid down under the Act. Now, did you realize, students, in this context? Did you all realize, students, in this particular context, that what you people were telling me just now about the definition of total income was only on point number C? That is what you people told me just now. That, sir, total income means 5 heads of income. Then, in that case, clubbing, Chapter 6A set off, do those adjustments and you get a total income. What you told me was only point number C of this definition in that case. But before you go to point number C, you will have to take into account A and B. Before you go to, you cannot directly jump to point number C. You will have to take into account A and B. Because what, students? Because what is that you will compute and computed in the manner laid down under the Act? And computed in the manner laid down under the Act. So the question to all of you is, what is that you are going to compute? In this case, you are going to compute an income. Which income? All the income? No. An income which falls within the scope of section 5. That income. Which income? Income which falls within the scope of section 5. That is what has to be computed in the manner laid down under the Act. Do you all agree with me? What is to be computed is the income. That income which falls within the scope of section 5. This is what has to be computed in the manner laid down under the Act. So that is what will give you finally what? The total income. So therefore, before you get into the mindset of computation of 5 heads, then clubbing, set off, and Chapter 6A, before you get into that mindset, before that, you need to filter in 2 important things. What is that? That you require an income. That income which falls within the scope of section 5. That income which falls within the scope of section 5. Is that point clear to all of you, students? Every one of you in this context? So this is what exactly the proposition is. Hope that every one of you are clear with this. So if that be so, then may I say, so be it. Isn't it? So let's start with this one, friends. Point number 1 is income. Students, now give me a layman meaning. What do you mean by the term income, students? A layman meaning will also suffice. A layman meaning, students, will also suffice. So what do you mean by the term income? At this point of time, students, you are no good but a layman itself. Isn't it? Layman in income tax at this particular point of time of your life. So therefore, the situation is, as a layman, what do you mean by the term income? Quickly! What is that? Okay, students. So income, indeed, many people are saying, sir, it is earnings. Some of you are saying profit, isn't it? Somebody are giving example in the form of dividend, interest, salary. That is fine. That is only an example. But if I have to ask you, what did I ask you? I ask you, what is the meaning of it? Receiving consideration against some act or services, isn't it? And that is right, Mukta. So all these are perfect. Receiving a consideration against some act or services. And that is perfect. So all this primary in your mindset, now you are all clear exactly what primarily constitute an income. Now students, let me in fact give you a solid particular meaning of the term income. I am not giving you right now anything which is written in law. I am just giving you a general principle. These are general principles. Whenever, if some word has been defined, which I want you to know about it, I will make you write that. And for that, like the way I have done it for total income. Didn't I told you what is total income? Total income means A, B, and C. Now, as far as income right now, what is my question? My question is only right now on income. What do you mean by income? So, as such, I told you that what is your general understanding of the term income. So, let's stick only to the general understanding. If there are anything to add as per the section, that I will let you know. But right now, our focus on the term income is what you understand the term income as per your general understanding. So, students, income means an amount which you have earned. Income means an amount which you have earned. Or may I say in this way, income means an amount which arises from a definite source. As simple as that. Income is an amount which arises from a definite source. That is what is the term income. Repeat with me. Income is an amount which arises from a definite source. Let me give an example now. If employment is a source, then what is the amount which is an income? If the employment is a source, then salary is the income. Again, I'm repeating that that general principle of the term income. What did I told you? Income is an amount which arises from a definite source. So if the employment is the source, salary is the income. If house property is the source, then rent is the income. If business is the source, profit is the income. If investment is a source, dividend, interest is the income. If articleship is a source, stipend is the income. And if whatever is the amount, that is not an important. So stipend, why you don't say sir about a stipend, we feel humiliated. You feel humiliated, so be it. But that does not take away the real meaning of the term income. Is stipend an income? Yes, it's an income. Why? Because it is arising from a definite source, and the source in this particular case happens to be your article. Now, many students are saying, sir, but stipend is exempt. Did I ask you whether it is taxable, whether that income is taxable or exempt? That I'm not asking you anything at all. Right now, our focus is whether it can constitute as an income or not. Whether it can constitute as an income or not is our only limited focus. We are not extending our discussion further to see whether it is taxable or it is exempt. Though that at this stage, we are not discussing that particular point. So is that an income? And the answer is yes. This is a solid meaning of the term income. Anything which arises from a definite source, becomes an income. This is the meaning, students. So first I'll make you write the general meaning, students, of this one, and then we will explore further the term income. It's a fantastic particular, students. The journey and the term itself is magical. Income is income. Just insert, students, income as understood generally. Income, comma, as understood generally, comma, is an amount which arises from a definite source. Is an amount which arises from a definite source. Therefore, if employment is the source, comma, salary is the income. If house property is a source, then rent is the income. Students, you can write further. If business is a source, profit is the income. If investment is a source, dividend and interest is income. Please write. You can write further. Whatever I told you, I'm just writing etc. Did you wrote? If the business is a source, profit is the income, the investment is a source, dividend or interest is the income. Perfect. Students, by the way, in your final CA, salary and house property is not a part of a syllabus. This two topic in the heads of income is not a part of your syllabus. Okay, but eventually what happens, at least house property, one way or the other, gets attended in final CA. You'll find some topics wherein at least house property will get attended one way or the other. In our discussion, in our analysis, or something to do with some topic, you'll come to know that house property has been attended. Not in that detail, like the way you people were calculating GAV, expected rent and actual rent calculations. Those things will not be considered because that is not something that they ask. Okay, but nevertheless, family, you will have a fair bit of an idea or the understanding of that particular heads of income. Salary, so far as salary is concerned, couple of standard deductions and other things and all, you will have a good idea about it because of one topic which I'll let you know later on. Okay, but technically it's not a part of a syllabus. ICAI itself has officially made the announcement that this two heads of income will not be a part of it for the only reason that why the ICAI have done this, for the reason that they do want to focus, they do want you to focus on the advanced topics like non-resident taxation, transfer pricing, and like PGBP, etc., trust taxation, TDS, TCS, etc., etc. So those are the advanced topics is what the ICAI wants you to lay your emphasis upon. That is the reason why they have cut down couple of items of your syllabus, which they find it is unnecessarily creating lot of bulkiness in final CA. Okay, now students, continue further, right further after that. Therefore, from the above, it is clear that the term income ordinarily means a revenue receipt. Therefore, from the above, it is clear that the term income ordinarily means a revenue receipt. A revenue receipt is an amount which possess the following two characteristics. Which are the characteristics, students? Regularity, and certainty. Regularity and certainty. Now, students, you tell me right now, the example that we have just now highlighted, employment is the source, salary is the income, house property is the source, rent is the income, etc., etc. Whether on that amount, students, whether these two characteristics which we have just highlighted, what is that? Regularity and certainty. So whether these amount have these two characteristics, whether these amount has these characteristics, which characteristics? Regularity and certainty. And the answer is yes, they do have in this case. Now, in that case, salary, everyone will say. House property, rental income, everyone will say. Somebody will argue, but sir, the dividend and all, dividend we get only yearly, doesn't matter. regularity does not mean that you should be receiving it every day or every 6 days or every month. Regularity can happen even like biannually or annually or maybe once in 2 years. That is also possible. Mukta, that is also possible. That doesn't matter. But the point is that it should be regular. Regular does not mean that frequency has to be very less. Every day, every month, nothing of that sort. Regularity can be anything. It's very subjective. The time frame of the money to be received could be anything. But whatever it is, it has to be regular. If it is annual, it has to be regular. Now, what about the certainty? Is there a certainty of these amount to be received? Answer is yes. There is a certainty, or may I use the word reasonable certainty? May I use the word reasonable certainty that these amount will be received? So whenever an amount possess these two characteristics, those amount is to be referred as revenue receipt. Now, did you realize in your inter-CA or so, you people would have by heart, you would have heard 10,000 times revenue receipt, capital receipt, revenue receipt, capital receipt. But the real meaning is something which you have not yet deduced. And in CA final students, what happens is that why the topic like PGBP is considered to be one of the toughest topic in final CA, because the fundamental reason of what you are getting the amount is not known by the student. So if you don't know that this amount represents as a revenue receipt or it is a capital receipt, then you, without appreciating the meaning, if you go further, then obviously the baggage or the burden would be heavy in the tough topics. And that's the reason why the topic like PGBP will become a cakewalk, students, to all of you. Once this core principle is known to you, then these difficult topics will become a cakewalk, students. That exactly the game. So we will deliberate on that particular point, but nevertheless, regularity and certainty. So can I therefore conclude income means revenue receipt? Income as generally understood. Income as generally understood is nothing but a revenue receipt. A receipt which has the following two characteristics, which is regularity and certainty. Okay. However, let me ask you some question now. In your inter-CA students, in your inter-CA, you have learned that lottery winnings, winnings from racehorses, gambling, etc., gift, these items are also considered as an income. Under which head? IFOS. So first it was an income, it is considered as an income, and then the appropriate head where it was chargeable to tax, the appropriate head where it was chargeable to tax was allocated as IFOS. Was allocated as IFOS. So therefore the question to all of you right now, students, is that in that particular case, don't you think that these examples which I have put up with all of you, lottery winnings, gift, etc., do they have these following characteristics? Do they have these following two characteristics of regularity and certainty? Does this lottery winning, gambling, winning from race horses, etc., whether these have these certainty, regularity? Answer is no. You will find that it is just merely a game of chance. It lacks the two characteristics of regularity and certainty. It is gift also. You are not certain whether you are going to receive the gift. You are not certain that you are going to receive the gift. You happen to receive it, that is one thing. But is there a certainty that you will receive the gift or you shall receive the gift? Answer is no. But was the gift chargeable to tax? If you remember in your inter CA, yes. How that has happened? In that context, how that has happened, students? So there is a background story, students. There is a background story. You need to appreciate that background story. Once you could appreciate that background story, you will know why that these items, which are not essentially in the nature of revenue receipt, which are not essentially in the nature of revenue receipt, are being taxed. So students, in that context, let me give you a bit of a background. And in fact, I will take you to an era of those emergency period in India of 1977. Around that period, when India have experienced a situation like an emergency. Did you know what was the tax rate that time? Students, before that, before you answer this question, see, let me draw a diagram. Students, anything tax is a function of two factors. Tax is a function of two factors. Which are those two factors? Just now I told you, no? Amount and the rate. Whether you are talking about GST, whether you are talking about customs duty, whether you are talking about income tax. So any tax is a function of two factors, amount multiplied by the rate. Here, the amount is like an income or total income. Okay? And multiply this by the rate. Students, professionally, or may I say not professionally, even as a student, you should know these terms, huh? Because others are not aware of these terms. Or even though they have heard it, they cannot express it. And why they cannot express it? For the only reason that students, they have not appreciated why this term has been used. So you please pay attention exactly what is this term. So there is an income and then there is a rate. Income and rate. Income and rate. Can you see income is where? It is the base. So this income, students, can you see this? This is nothing but, students, what exactly it is? It is the base. Or may I use the word the tax base? Base means base is where? On the ground. So this is nothing but my tax base. And on the tax base, primarily, which is your income, on that you apply the rate. On that you apply the rate. Now what is the headline rate, students? Headline rate. You say, sir, what is this term we have heard for the first time? Yes. But when you go and you discuss with the partner of the Big Fours and all, at that time you will communicate in this way. The headline rate. Headline rate means you know that the top rate for an individual primarily is right now is at 30%. Headline rate for the individual, you'll say 30%. Headline rate for the company is something else. I'll not discuss right now about the company because there are things that you should know about it. But at least let me only ask you whatever the little bit that you know. So for the individual that you are aware, as per your inter-CA knowledge, primarily individual, the headline rate is 30%. Headline rate means the maximum rate. After the last slab, the last slab is 30%. So the last slab is the top, the headline. Headline. So the base started 5%, 10%, 20%, and the headline, the top is 30%. That is a headline. Isn't it? That's exactly how it has to be seen. 30% is the rate in that context. and the base is your income. Now students, as you know, the income that we have discussed up till now is nothing but the RR. What is RR? Revenue receipts. What is RR? The revenue receipts. Income that we have discussed up till now is nothing but the RR, which is nothing but the revenue receipts. And just imagine this, students. Do you know? From salary, employment salary, house property rent, business profit, investment interest dividend. That is it. What happened, students, in this case? I now take you to that 1977 era. That time, did you know what happened? What was the rate of tax? Now I come back to that original question. What was the rate of tax that time? Individual, I'm talking about it. Many of you should be aware of it. And at least you, if not, then you may ask to your parents. What was the rate of tax then, during the era of emergency? And you will come to know a shocker. The headline rate, students, that time was 97%. 97%. Do you realize exactly what it is? 97%. 97% will mean that, say for example, if I am earning 100 rupees as an income, 100 rupees as an income, students, then 97 I will have to end up paying that as tax. And only 3 rupees is what I am going to take it as my take home amount. 3 rupees only. So what is the best thing? I have then decided, if your rate of tax is so high, students, right now, if I don't know whether you people are going through the global news, what is happening in the tax arena globally? What is happening in the tax arena globally? Are you aware of that? That everywhere, countries, especially like US and all, they are trying to cut down the rate of tax. Why they want to cut down the rate of tax? See, two things will happen. If you keep your tax rate very high, then two things will happen. One, the people, those who are super rich, they think that bulk of their income is going to go as a tax. Then what they will do? They will move out of their country and they will relocate themselves in those countries where the rate of tax is less. And that definitely will be very detrimental for the economy or the country. When the people start migrating, which kind of a people? Those well-off people, those financially well-off people, if they started migrating outside the country, then the tax collection will have a serious dip. Second is, those people who are not that well-off, like middle class, lower middle class, if the tax rate is very high, then these middle class and lower middle class people, they will then dare to challenge the tax and they will say, we will not pay the tax. They will dare to challenge the tax and they will say that we will not pay the tax. If the government wants, put us to the jail. Put us where? To the jail. At least in the jail. Then we become the government responsibility. Then the government will have to take care of our food, clothes and shelter. Isn't it? And that exactly is the point. So therefore the non-compliance would be very high. From whom? From these middle class and lower middle class people. They will go for a non-compliance. And those who are rich or super rich category of people, because of the very high rate of tax, they will start shifting their own particular location to another country where the rate of tax is low. And that is the reason why, students, you are finding at this juncture worldwide this phenomena is happening. And what is the phenomena known as? The reduction of rate of tax. So when 97% was the rate of tax at that time, the government learned the lesson at that stage, that there was non-compliance, number one. by the middle class and the lower middle class people. They were ready not to pay the tax and were ready to go to jail. And second, those people who were very well off or rich or super rich, they were saying what? We will start migrating to UK or some other countries. And that was the reason why the government, after taking the beating, they reduced the rate. And now the rate of individual we can see is at 30%. 30%. So the rate got reduced from 97 to 30%. This is the headline rate. I'm only talking about individual. I'm not talking about the companies and all right now. Now with the 30% being the rate, just I told you some time back, what I told you, tax is a function of two factors. One is the amount, another is the rate. Just tell me now, students, did the India budget from 1977 till today, we are now in like June 2025. From 1977 till today, did the budget of the country has increased or it has shrinked? What has happened to the budget of this country? Did it increased or it has shrinked? What has happened, students? You will find obviously, sir, it has increased. So my question to all of you is that how it has increased? With the rate remaining at 30%? What has changed? That it has increased. What has changed? That it has increased. So the change is, students, is this. The base has increased. The tax base has increased. That exactly is the point. And one of the reasons, friends, if you see the Prime Minister also saying in many of this the speeches that we have pulled up many people out of the poverty line. So now those who were poor are now, say, in a lower middle class. Might be those who are in the lower middle class, they are in the middle class. So what has happened, students? Systematically the base has increased. More people are earning income. And something more has happened. To increase the base, what the government is doing? They are doing two things. Please pay attention to them. These are the policy making. Tomorrow you don't know. I have got many students actually who are working in the ministry. They are working in the ministry, students. Finance ministry. One is, in fact, she is was working with the ministry. Now she has went to the EY or PwC in Delhi. One of the this thing. Just now have met me some 2 months back itself. So one of this thing. And these are the policy matters. First you need to understand the policy and then you enter into this thing. So you understand and appreciate whatever is done by the government. You appreciate this, that yes, this is the logic why we are reading this provision. Please understand the background of it. If you know the background, you will know the foreground. But if you don't know the background, then if you jump into the provision, you may understand the provision, but you will not retain the provision and you don't know how it will further navigate into its final destination. So, to increase the tax base, students, the government have done two things. Which are those two things which the government have done? One, it has brought a lot of people to the tax net. New people in the tax net. And the second one, students, which India has done or the government has done, you know what they have done? They have increased the scope of the term income beyond what is understood generally. Repeat with me. What is that second thing that they have done? Second thing that they have done, they have increased the scope of the term income beyond what is understood generally. Increase the scope of the term income beyond what is understood generally. That exactly is the game, students, of the government. Nobody understands the game of the government, students, better than you, isn't it? So what they have done, like they came to know people are playing KBC, and just you have seen those are the people, like for example, middle class people. They may be earning 15,000 rupees salary or 20,000 salary, or people who are studying, they are not earning right now. Or many of the KBC contestants are the housewife, homemakers. They are not also earning. But the government saw the potential that these are the people who are getting by chance 1 crore of rupee, 2 crore rupee, 3 crore rupee. And they also understand that these people in their entire life, they will not be in a position, or they may not pay the tax at all, or they may pay only little tax in their entire life. But from this particular event of what they have won, if we can get some tax from them, in that case it would be a huge amount. It would be a huge amount. But they also understand a dilemma. And what is a dilemma? The dilemma, students, for them is that they understand that here we are keeping an eye on an amount. We are keeping our eye on an amount which generally is not an income. Why it is not an income? Because it does not have the characteristics of a revenue receipt. Regularity and certainty. So how can we tax that amount which is not in the nature of revenue receipt? How can you tax that amount? Can you give me the answer, students? Let me see if you can. Catch me if you can, students, isn't it? Let me see if you can give me the answer that how the government can tax an amount. How the government can tax an amount which is generally not in the nature of a revenue receipt. What they will have to do, or what they have done to tax that particular amount. Quickly. What they have done. Let's see. Indeed. Indeed, students. So, what the government have done is that they understood the fact in this context that in that situation, that an amount which this person have earned is not in the nature of revenue receipt, and therefore if it is not in the nature of revenue receipt, therefore it cannot be considered as income. Generally, can it be considered as an income? No. So if generally it cannot be considered as an income, so let us do the honors. What is the honor which the government have done? Let us do the honor. And what is the honor which the government have done? Government have said that we will define these amount. We will define this amount as income. Although generally it may not be considered as an income, but for special purpose of this income tax law, we will define this amount as an income. Special purpose, isn't it? So they have done what? They have, in Hindi we say chun chun ke, isn't it? Chun chun ke marunga. Same way, they have started selecting the amount, and they have kept an eye on the high value targets. Wherever they found, okay, this is such a huge amount that the people are receiving, which are generally not in the nature of revenue receipt, which are not in the nature of an income, the government kept an eye on those amount. And what the government did? For special purpose, generally it may not be income, generally this amount is not an income, but for special purpose of the Income Tax Act, they have made that amount as an income. They have made the amount as an income. Is that point clear to all of you? Everyone? So they have defined that as an income. Now students, see here. Do we have the definition of income? Yes, we have. Primary. And this is the definition of income, students. Income under section, students, 2 clause 14. Be careful. It defines the term income. Now see. No, sorry, not 214. It's 224. 214 is capital asset. Income under section 224. It defines the term income in inclusive manner. That is the beauty. So students, please hear it. It includes the following. It includes the following, and one of the item is the lottery winnings. One of the item is, say, gifts. I'm just giving an example. There are lists. There is a huge list actually. And now you know what is there in this list. What about capital gains, students? Capital gains. Tell me about capital gains. Deliberately, did you realize? You have not realized, but I knew what I did. Remember I was telling you, if employment is a source, salary is the income, house property is a source, rent is the income, business is a source, profit is the income. Did I mention anything about capital gains? Did I mention anything about the capital gains? No, I didn't. And that was deliberate. That was deliberate, student. Why? Because I knew that capital gains, do you earn regularly all these certainty, regularity? No. Capital gains, therefore, is not a revenue receipt and accordingly not understood as income generally. Not understood as income generally. But you know the government know that this person throughout his life, he did nothing. And he inherited from his parents, say, 250 acres of land. And what he did only one thing. In his entire life, he did only one economic activity. And what is that one economic activity that he did? He sold that 250 acres of land. And from that, he earned 100 crore rupee. That is it and nothing else. As if that he came in this earth to sell his forefathers' property. That was the only purpose of his existence in this life. And 100 crores is what he in fact sold, and he earned 100 crore rupee, and then he slept for the rest of his life. So now you tell me, regularity and certainty, no. Revenue receipt, no. Income generally, no. But 100 crores, government saw that. So what they did, they made or defined capital gains also as an income, so as to get the right to tax. Because what can be taxed, students, what can be taxed is an income. Which income? Income which is generally in the nature of revenue receipt, or if it is not generally in the nature of revenue receipt, then those amount which is defined as an income. Defined as an income. And accordingly, students, to expand the list, I'm giving you another example is the capital gains. Now you understood this thing. Capital gains. They have defined the term income to include even capital gains. Because capital gains otherwise is not an income. Let me give one last example. So this is such an important discussion, students. Your mind should really now broaden. Your mind was like this, so narrow. As far as the understanding of income tax law is concerned, it now needs to broaden to different vistas, students. Now comes the last one. I give you one example. Are you aware of this Anil Ambani and Mukesh Ambani, when they split, at that time, Mukesh Ambani gave somewhere around 5,000 crore to Mr. Anil Ambani. That was the time. 5,000 crore was being given by Mukesh Ambani to Anil Ambani. Are you aware of that particular proposition? In that situation, students, 5,000 crores of the amount. So what happened, students, was this, that with the 5,000 crore of the amount given, just tell me, do you know why they have given? It was essentially in the form of a non-competent agreement. It was what? Essentially in the form of a non-competent agreement. What is this non-competent agreement? That you will not enter to my line of business for some period, not for entire life, for some period. And I will not enter to your line of business. Because obviously, petroleum business was kept by Mukesh Ambani, Reliance Petroleum. And as you all know, aware, this is the huge cash-rich business for the Reliance industry. And Mukesh Ambani know the fact that the biggest competitor that I will have will be from my brother only. He knows all the trade secrets. He knows all the people from the ministries and all. So therefore, he is my biggest competitor. So accordingly, I gave him 5,000 crore so that he will not compete with me, say for 5 years or 10 years. I don't know the agreement, but for a particular period of time. And by that time, I will go so far that he will not be in a position to chase me up. Now you tell me, 5,000 crores given to Mr. Anil Ambani. Tell me, is this 5,000 crore in the nature of a non-compete agreement? In the nature of a non-compete agreement, is it in the nature of a revenue receipt? Can I say this is a revenue receipt? Mr. Anil Ambani, will he be receiving this amount daily or annually from Mukesh Ambani? Regularity, certainty? Answer is no. It is only one-time payment that has been done. That is it. And therefore it lacks those characteristics of regularity and certainty, and hence it is not in the nature of a revenue receipt, and hence not ordinarily considered as an income. And not ordinarily considered as an income. Is that point clear to all of you? So what the government did, students? What the government did in this case, because it was not ordinarily considered as an income, what the government did? It has defined that amount as an income. And hence, you will find in this context, non-compete agreement also. Non-compete agreement amount. Non-compete agreement amount. Can you see all these examples which I am giving it? What are these examples? Are they revenue receipt? No. They are specified capital receipt. Not, shouldn't be careful, huh? Government is doing a cherry picking exercise. Cherry picking means chun chun ke. So they are doing a cherry picking. That okay, they find that this amount is a high value target. Let us make this amount as an income. Because they know that ordinarily this amount is not an income. Why it is not an income? Because it is not in the nature of a revenue receipt. And hence ordinarily it is not in the nature of an income. So what they have done, they have defined that amount as an income. What they have done, they have defined that amount as an income. And now the fact that they have defined that as an income, what the government is now saying, we are now taxing the income. So they define this as an income. Now they get the mandate of taxing this amount as an income. I hope that all of you are clear with this one. So therefore, in this context, herein, right, so I hope that every one of you have copied this diagram. All of you? Perfect. So herein, students, in order to expand the tax base, the government has defined the term income to include what? A specified not all students specific to include specified capital receipts. Specified capital receipts. So now students, all of you are now aware what the government did. They have first selected the target amount, and by selecting the target amount of the capital receipt, they have defined that as income. Once they define that as an income, they got the mandate to tax it. Once they define that amount as an income, they got what? They got the mandate to tax it. Now, obviously, that mandate has to be exercised in a particular head. That mandate has to be exercised in a particular head. So, accordingly, you find what? Lottery winnings, gift has been classified to be charged under which head? Under the head IFRS. Capital gains under the head capital gains. And last is the non-compete agreement is charged under the head PGBP. You may not be aware of it. This I am telling you. Okay. So first they define that amount as an income. Which amount? The specified capital receipt. First they define that amount as an income. Which amount? The specified capital receipt as an income. And once they did that, students, what was the next step that they did? What is the next step? The next step, students, in this case was then they classified that amount in a particular head where accordingly they will be charged to tax. And the head, we already know which head we are talking about. So now to conclude, students, therefore, income means what does income means? RR, which is revenue receipt, plus what? Plus, don't use the word CR. You have to use plus specified CR, not all CR. I told you the high value target. There are many capital receipts. The government doesn't want to waste the time also, in fact, to tax every capital receipt. Then in that case, what is the relevance of this concept of revenue receipts and capital receipts? No, not all capital receipts are taxed. Only those capital receipts are taxed which are defined as an income. Only those capital receipts are taxed which are defined as an income. That is the reason why I am telling those capital receipt as specified capital receipt. So what do you mean by the term specified capital receipt? Specified capital receipt means an amount which is defined as an income. Or may I say, specified capital receipt means a capital receipt which is defined as an income. That's it. So now, students, in whenever henceforth the equation we have already developed, now in the income tax law, till the last lecture, students, I am going to only say what is income. What is income, students? Under the income tax law, what is income under the income tax law? Revenue receipt plus the specified capital receipt. Revenue receipt plus the specified capital receipt. That is the income. Can you write one sentence, friends, in a different color pen in your notebook? Therefore, all revenue receipt are taxable. Therefore, all revenue receipts are taxable. Why all revenue receipts are taxable? Because they are in the nature of income. Therefore, all revenue receipts are taxable unless they are specifically exempt from tax. Whereas capital receipts are not taxable unless they are specifically charged. Therefore, all revenue receipts are taxable unless they are specifically exempt from tax, whereas capital receipts are not taxable unless they are specifically charged to tax. Why capital receipts are not taxable? Why I've said capital receipts are not taxable? Because they are generally not an income. They don't have those two, they don't possess those two characteristics. But if they are defined as an income, then yes, they and only those amount will be charged to tax. Only those amount will be charged to tax. So students, with this students, we are done with our most important discussion in this total income context is what you understand by the term income. What is income? Income is RR plus what? Specified CR. This is the equation that is going to be considered. And what do you mean by specified CR? Those CR which are defined as an income. So we are in the charging section. In the charging section, the central theme was the charge is on the total income. And the definition of total income, I've split it into three parts. Three parts means point number A, revenue receipt plus specified capital receipt, which is your income. Income which falls within the scope of section 5 and computed in the manner laid down under the act. That is what this income. And this will result into total income. On the total income, multiply with what? With the rate of tax. You will get what? The tax liability. Tax liability on which date? As on the relevant date, which means you will calculate this tax liability as per the law which is enforceable. As per the law which is enforceable on the relevant date. And what is the relevant date? The first day of the assessment year. The 1st April of the assessment year. The 1st April of the assessment year. And what is your assessment year, students? In that case, for the previous year, you are in previous year 25-26, isn't it? This is the previous year. For all the students appearing in May 26, September 26 and Jan 27. And then relevant AY 26-27. So the relevant date in this context would be 1st April. Keep yourself reminding this one. I hope that all of you are clear with that entire discussion and deliberation that we have done so far. All of you. Perfect. That exactly is the point, students. Students, we now, in the next session, students, we enter into point number B and you will touch base the non-resident taxation. You will touch base, students, the non-resident taxation once I enter into the point number. Students, let's then meet up in the next session. Till then, take care. Bye-bye. Okay, Mukta.